Hello and welcome to Vox Markets. Today I've got Hummingbird Resources and Dan Betts from that company, who's the CEO, and Kocken, who is COO. How are you today, gents?
Morning, Zach. Good.
We've got some questions for you. First one is your Q2 2021 operational and trading update came out this morning with improvements in production and AISC from Q1 numbers. Can you provide some of the key highlights?
Yeah, sure, Zach. I'll take that one, Anthony. As you say, this morning we brought out our Q2 update. The main statistics are that we poured 24,494 ounces of gold, slightly up on Q1, and we sold 24,790 ounces of gold. The difference being a slight drawdown in inventory. Our gold inventory is 1,972 ounces, which is valued at $3.4 million. And I suppose the main key for the quarter is the AISC number of $1,386 an ounce, down about $100 an ounce from Q1. The main driver of that cost reduction in Q1 simply being a function of more ounces. During the quarter, we have been, one of the priorities for the year really has been to focus on improving our steady state operation to make Hummingbird a more reliable and predictable operation. I think if you look at the throughput numbers for the plant, we've had our highest throughput ever achieved at Yamflula, which is a good testament to the team and the work that's being done. And Antti may comment later in terms of other initiatives going on to reduce costs further. But a few other highlights I'd just like to mention, if I could, Zach, from the quarter. It was a landmark quarter really for Hummingbird in that we made our final payment to our lender, Kouroussa Bank. We paid off the final $4.7 million of our loan that we took to build the project. So Hummingbird is a debt-free company and it's paid off all the money borrowed to build the mine in 3 years. So I think that's a great achievement. And obviously it means that we now have a platform from which to generate free cash and hopefully complete our growth plans to turn Hummingbird into a multi-asset mining company. On that note, we've made great strides at our Kouroussa project in Guinea. We've also invested heavily in the quarter on exploration. We spent around $3.5 million. We've announced a couple of exploration results during the quarter with, I think, truly exceptional drill intercepts. We're obviously a long way from being able to piece that together as a resource yet, and we're awaiting a lot more assays from the lab in Bamako where there's a bit of a backlog, but I think the exploration is going really well. So across the board, I think it's been a steady and improving quarter with possibly some real excitement in the exploration and the developments at Kouroussa. So, broadly speaking, I think a very positive quarter, Zach.
And presumably, private investors will really appreciate the debt-free tag that you've now got. That's quite unusual. It should make a difference, I presume.
Well, I think so. To have a totally debt-free company with a bought and paid for mine producing gold and I think relatively a very cheap market cap, I think there's an awful lot of potential for Hummingbird in terms of valuation.
Anthony, you're calling in from site in Mali this morning, which is quite a triumph, I suppose, of communications. So it's an interesting time to give on-the-ground feedback on how things are going in general there. You mentioned a cost and productivity improvement initiative being developed. Can you give us more details on that?
Yeah, thanks, Zach. I've got my feet under the desk here at the operation, and certainly we've started a number of work streams in relation to productivity and costs. So an upfront example is the throughput for the quarter and how we've been optimising that circuit and also making sure it's sustainable going forward. There's other work packages on the ground that we're investigating and pushing on: drill and blast, cost and engineering improvements, and also ore body control for dilution. There's a greater package of work within each department and looking at how we can better utilise our resources and also get better efficiencies. So there's a lot of engagement on the ground here and it's moving forward. There's a structure around it and we're starting to see some of those results going forward. Now, the intent of this is to get a stable operating platform with predictability and discipline.
You've got productivity and AISC trends going in the right direction. How is the second half looking on key metrics?
The grade profile in H1 was some incremental increases in the last quarter. We're looking for, again, incremental increases in the grade, maintaining those throughputs and also then better improving our costs. So we see those also improving in a positive direction into H2.
Kouroussa, you note final capex estimates nearing completion, and we'll update the market shortly with more details. Can you give a bit more color on that and the next steps? That's Dan, or Dan,
yeah,
rather.
Yeah, sure, Zach. I mean, during the quarter, we were awarded the mining permit at Kouroussa, which was the final permitting step to allow us to start the project. Obviously, we need to finalize the detailed capex number that has been a detailed process. I mean, COVID has made things challenging to pin down, things like logistics, freight, fuel, all these things are moving around all the time. So we obviously want to come out with a number that is accurate and defendable, and we will deliver to it. So we're very close to doing that, and I'm fairly confident that the numbers are in line with the expectations that we had when we bought the project. So I think Kouroussa is looking very exciting. Obviously, hiring key people has already started, trying to identify key people, mobilizing to the ground, looking to start infill drilling to increase indicated resources. There's a number of work streams that are already starting or due to start very soon. But the key piece of news for the market will be the economics on the project, which we will look to bring out as and when they're ready, but in short order.
As far as the Jan Falila drilling, that's showing a material amount of meters drilled year to date, or 33,500 meters, but you've got a backlog at the labs for assay results to be released. What are your expectations in the second half in terms of drilling updates?
When we get the results from the lab in Bamako, to release those results to the market, and obviously to tie them together in a resource model and provide updates in terms of resource growth. The focus of our exploration program is to add mine life to Jan Falila. I mean, the value of exploration to us is huge because we have a mill right there that we can feed immediately. So when you look around in the market and you see exploration companies announcing a few drill holes that are no better than the drill holes we're announcing, and you see the value that is being created by these drill holes, I think it's only logical that that has to come through to us in short order if we continue to get the results we are seeing and hoping to continue.
So I presume for the second half of this year, you're assuming that the market will sort of finally wake up to what you're doing and maybe give you a more fair comparison with your peers.
Well, it's just for us, 6 months mine life is 6 months of business that we will be able to produce gold from. Whereas if you were developing a project, you need to show that you have a multiple year resource to pay back the capital to build the plant. It's a huge multi-year program. Ours is instantaneous. We find good grade or increases to our resource. It's straight through to the bottom line of the mining operation. So I think it's the most tangible way to add value.
Okay, well, we'll see how everything goes. Dan Betts and Anthony Kocken from Hummingbird Resources, thank you very much indeed.
Thanks very much.
Exactly.